What is happening, crypto champions? Get ready for a rapid-fire update that's going to blow your mind. The market is moving at lightning speed, and you need to be in the know to stay ahead of the curve. We've got game-changing moves from major players, shifts in investor sentiment that defy expectations, and bold strategies that could redefine the future. Are you ready for the unmissable intel? Let's dive in. First up is a titan of industry making a colossal bet on the future of digital assets, raising billions and tapping into unexpected influences. Could this be the move that cements its place in the new financial era? Then, we're seeing a dramatic shakeup as investors are ditching digital gold for a much older, more traditional store of value. What's driving this massive exodus, and what does it mean for the market's stability? We'll break it all down. Next, in a world of increasing volatility, a smart new strategy is emerging, offering a pathway to steady gains without the usual headaches. Is this the future of passive income in the crypto space? We'll explore the innovative approach that's capturing attention. And finally, we're looking at how artificial intelligence is set to reshape everything, including how we think about long-term value. Can a certain digital currency become the ultimate safe haven in an AI-powered world? Prepare yourself for insights that will reshape your perspective. Stick around, because you won't want to miss a single second of this. Hit that subscribe button, ring the notification bell, and let's get this episode started. Metaplanet's bold Bitcoin treasury strategy. Japan's premier Bitcoin treasury firm, Metaplanet, has just announced a monumental acquisition, adding 1,009 BTC, valued at a staggering $112 million, to its reserves. This strategic move propels their total Bitcoin holdings to an impressive 20,000 BTC, positioning them as one of the world's largest public corporate holders of the digital asset, potentially even surpassing industry giants like Riot Platforms. The acquisition was executed at an average price of approximately $111,068 per Bitcoin, underscoring a calculated effort to fortify their treasury amidst a dynamic market landscape. This significant acquisition coincides with Metaplanet's aggressive fundraising efforts. The company has successfully raised $65.73 million through the exercise of warrants by investor Evo Fund, with a portion of these funds allocated to the redemption of existing bonds. Looking ahead, Metaplanet is gearing up for an even more ambitious fundraising round, aiming to secure up to $3.7 billion by issuing preferred shares. The lion's share of these proceeds is earmarked for further Bitcoin acquisitions, signaling a clear and unwavering commitment to its Bitcoin-centric treasury strategy. Adding a fascinating layer to this narrative is the involvement of Eric Trump, son of former U.S. President Donald Trump. Serving as an advisor to Metaplanet since March, Eric Trump recently attended the firm's extraordinary shareholders meeting in Tokyo. His presence underscores the growing influence of the Trump family within the global cryptocurrency arena, particularly their expanding engagement in Japan and across Asia. Eric Trump's prior public statements, including his optimistic outlook on Bitcoin's long-term value at the Bitcoin Asia conference, further highlight this burgeoning connection. However, Metaplanet's journey hasn't been without its hurdles. The firm's share price has experienced a notable decline of 54% since mid-June, even as Bitcoin's price saw a modest gain. This stock performance presents a challenge, potentially reducing the incentive for warrant holders to exercise their rights and impacting the company's liquidity. In response to these market dynamics, Metaplanet recently approved a substantial share issuance, demonstrating its agility and determination to adapt and continue its Bitcoin acquisition plans. Metaplanet's bold strategy mirrors the broader corporate adoption trend of Bitcoin as a treasury asset, a path pioneered by companies like MicroStrategy. While this approach carries significant potential, its success hinges on securing the necessary funding and maintaining stock stability within the inherently volatile cryptocurrency market. The firm's ability to navigate these challenges will be closely watched as a bellwether for corporate Bitcoin treasury strategies. But is this strategic Bitcoin accumulation enough to weather the storm? Get ready, because the next story reveals a dramatic shift as investors are turning away from digital assets altogether. Gold shines as Bitcoin's safe haven status crumbles. In a stark reversal of market sentiment, gold has surged to unprecedented record highs, surpassing $2,500 per ounce on COMEX futures, while Bitcoin has experienced a precipitous 25% decline within a single week. This dramatic divergence signals a potential seismic shift in investor preferences, with a noticeable flight to traditional safe haven assets amidst escalating macroeconomic uncertainty and a growing distrust in the cryptocurrency market. The contrast could not be more pronounced. As geopolitical tensions escalate and central banks maintain accommodative policies, investors are increasingly seeking the perceived stability of gold over the volatile digital asset class. Bitcoin, which had previously enjoyed a strong rally earlier in the year, has now entered a period of significant decline. Its recent underperformance has ignited a fresh wave of debate regarding its long-term viability as a store of value, and its ability to function as a reliable hedge against inflation or a safe haven during times of economic turmoil. The asset's growing volatility is raising red flags for many, prompting a reassessment of its risk profile within diversified investment portfolios. This downturn occurred against the backdrop of a broader sell-off in risk assets, with equity markets also exhibiting signs of strain as investors recalibrated their strategies in response to evolving economic indicators and potential policy shifts. The role of central banks in this market dynamic cannot be overstated. Their continued commitment to accommodative monetary policies, despite persistent inflationary pressures, has provided a liquidity buffer for global financial markets and bolstered the appeal of traditional inflation hedges like gold. Conversely, Bitcoin's recent struggles have led a growing number of analysts to question its competitive edge against established safe havens. The narrative is shifting, with gold appearing to regain its traditional mantle as the ultimate sanctuary for capital when global uncertainty looms large. This apparent reevaluation of risk is further evidenced by contrasting fund flows. Gold-backed exchange-traded funds, ETFs, have witnessed substantial inflows of capital in recent weeks, attracting investors seeking tangible value. In stark contrast, Bitcoin ETFs have experienced net outflows, indicating a withdrawal of both institutional and retail investor interest. This trend highlights a critical period of reassessment, as investors weigh the perceived security and historical performance of gold against the speculative nature and recent volatility of cryptocurrencies. While some market observers caution against overinterpreting short-term trends, the sustained divergence between gold and Bitcoin's performance is undeniably significant. It could represent a deeper, structural shift in how modern finance perceives and values risk, potentially signaling a long-term recalibration of asset allocation strategies. As uncertainty pervades the global economic landscape, gold's time-tested appeal as a safe haven seems to be resonating more strongly than ever, casting a shadow over Bitcoin's nascent role in the same arena. But as investors flock to gold, a different kind of opportunity is emerging for those seeking steady returns. Get ready, because the next story explores how cloud mining is making a powerful comeback in volatile times. Cloud mining's resurgence amidst crypto volatility. The landscape of cryptocurrency investment is witnessing a significant resurgence of cloud mining in 2025, driven by the heightened volatility that has characterized the market. As major digital assets like Bitcoin, BTC, and Ethereum, ETH, experience price fluctuations, investors are increasingly pivoting towards more stable, passive income-generating alternatives. Cloud mining, which allows individuals to mine cryptocurrencies by leasing hash power from remote data centers without the need for owning or managing physical mining hardware, is emerging as a prime solution for those seeking predictable returns amidst market uncertainty. Platforms like OPTO Miner are at the forefront of this trend, offering a streamlined and accessible entry point into cryptocurrency mining. By providing hardware-free mining through leased hash power, these services significantly lower the barriers to entry. Investors can choose from a variety of flexible contract terms, often with daily settlements, catering to diverse investment goals and risk appetites. This model simplifies the complex process of mining, making it available to a broader audience. Security and sustainability are key concerns for participants in the crypto space, and leading cloud mining providers are addressing these head-on. OPTO Miner, for instance, emphasizes robust security measures, including the use of distributed cold wallets and cybersecurity protections from industry leaders like McAfee and Cloudflare. Furthermore, a growing commitment to renewable energy sources for powering mining operations is being highlighted, aligning these ventures with global sustainability efforts and appealing to environmentally conscious investors. This dual focus on security and eco-friendliness is crucial for building trust and long-term viability in the sector. With a reported user base of over 1 million globally and a commitment to transparent earnings, cloud mining platforms are positioning themselves as a low-barrier, eco-conscious solution for navigating the complexities of the crypto market. The ability to start earning within 24 hours of contract activation and the flexibility of daily earnings deposits and withdrawals provide a tangible and accessible way for individuals to participate in the digital asset economy. The operational model typically involves a straightforward registration process, often with a small welcome bonus to incentivize new users. Investors then select a contract, ranging from modest initial investments to larger sums, and fund their accounts using various cryptocurrencies. Once the contract is active, the platform automatically allocates the least hash power, and earnings are credited daily. This user-friendly approach, combined with the potential for steady income streams, is making cloud mining an increasingly attractive option for a wide range of investors looking to diversify their portfolios and achieve passive income in the evolving world of digital finance. As the cryptocurrency market continues its dynamic trajectory, the appeal of cloud mining as a reliable method for generating steady returns, free from the operational complexities of traditional mining, is undeniable. Platforms offering enhanced flexibility, stringent security protocols, and transparent operations are well-positioned to capture a significant share of this growing market, attracting individuals seeking to hedge against volatility and secure consistent income in the digital asset space. But what does the future hold for digital assets in an era increasingly shaped by artificial intelligence? Get ready, because our final story dives into how AI could redefine Bitcoin's role as a long-term store of value. Bitcoin's AI-powered future, the ultimate long-term store of value. The rapid advancement of artificial intelligence is poised to fundamentally alter how we perceive and allocate capital, potentially positioning Bitcoin as the preeminent long-term store of value in this AI-driven future. As AI systems become more sophisticated, capable of complex data analysis, predictive modeling, and autonomous decision-making, the fundamental drivers of value and risk mitigation will likely undergo a paradigm shift. In this evolving economic landscape, Bitcoin, with its decentralized nature, fixed supply, and growing institutional adoption, is being examined for its potential to serve as a robust digital gold, a hedge against the uncertainties inherent in rapid technological transformation and potential systemic risks associated with advanced AI. The core argument for Bitcoin's enduring value in an AI-centric world lies in its inherent scarcity and decentralized architecture. Unlike traditional fiat currencies, which are subject to inflation and monetary policy decisions, Bitcoin's supply is capped at 21 million coins. This predictable scarcity, combined with its immutability and resistance to censorship, makes it an attractive asset for preserving wealth over extended periods. As AI systems become more integrated into financial markets, their analytical capabilities could further highlight Bitcoin's unique properties as a non-sovereign, globally accessible store of value, potentially driving increased demand as a hedge against inflation and systemic risks. Furthermore, the increasing integration of AI into capital allocation strategies could lead to a re-evaluation of traditional assets. AI algorithms might identify vulnerabilities in existing financial systems or predict inflationary pressures more accurately, thereby increasing the appeal of assets like Bitcoin that offer a degree of insulation from these factors. The ability of AI to process vast amounts of economic data and identify emerging trends could also lead to a greater appreciation for Bitcoin's role as a digital bearer asset, one that is not controlled by any single entity and can maintain its value across different economic cycles and geopolitical landscapes. Analysts suggest that as AI drives efficiency and potentially concentrates wealth, the demand for assets that offer diversification and protection against unforeseen economic shifts will grow. Bitcoin's digital nature and its global accessibility make it uniquely positioned to meet this demand. Its network effects, technological innovation, and increasing acceptance as a legitimate asset class, supported by infrastructure like ETFs, further bolster its case. The narrative is shifting from Bitcoin as a speculative digital currency to Bitcoin as a foundational element of a future digital economy, a reliable repository of value in an increasingly complex and automated world. The potential for AI to optimize resource allocation and drive economic growth could also indirectly benefit Bitcoin. As economies become more digitized and interconnected, the need for efficient, borderless, and secure value transfer and storage mechanisms will increase. Bitcoin, with its underlying blockchain technology, offers a robust solution for these requirements. Its role could evolve from simply a store of value to an integral part of the future digital financial infrastructure, further solidifying its attractiveness to long-term investors and institutions seeking to navigate the AI-driven economic revolution. What an incredible journey through the latest market-moving news. Get ready for the lightning round recap. And that's a wrap on another explosive episode. We saw Metaplanet making massive moves with Bitcoin, investors flocking to gold as Bitcoin faced a downturn, cloud mining surging as a stable income alternative, and a look at Bitcoin's potential as the ultimate store of value in an AI-driven future. Don't miss out on any of these critical updates. Make sure you're subscribed, hit that notification bell so you never miss a beat, smash that like button if you found this valuable, and share your thoughts in the comments below. For even more insights and real-time updates, follow us on all our social media channels. We'll see you in the next one.